Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the Australian dollar, the market is still continuing to pose a threat to that downside level of 70.90. The reason why I view this is if we monitor the RSI, it's once again breaking through the midway point. From the lackluster price action since the rebound of 70.90, still may see another challenge towards this level. If we do break this level, then the call is for the measured move of down to 69 cents and reassess from there. Any advancement should find resistance around 71.50 and a cap which was rejected at 72 figure 15. As you can see from the euro price action, it continues sideways. Even though the dollar index, which measures the greenback strength against a basket of 6 major currencies, was a little bit weaker, but nevertheless still maintains above the 96 handle and currently trading around 96.40. At present, I feel the technicals are still supporting for a further down test and therefore still keeps the view towards the broader objective, which is around 111.30.35, where I've outlined it here on the monthly time frame. In the interim, though, the upside attempts should continue to fail towards 113.45 to 114 figure 5. With the festive holiday season not too far away now, could see a little bit of less liquidity and maybe even more of a lackluster price action. Nevertheless, the broader pattern should eventually break down and continue to that objective. The dollar yen is nudging slightly higher, but not quite broken through that topside resistance seen around 114.15.25 after printing a fresh high of 114.17 today. Nevertheless, the pattern is attempting to rally, and we can see from the MACD not supporting this case. Like we saw previously, a good rejection, and before that dragonfly doji, the market is back in again to retest the tops. Not content with the fact that the bears are still up there, so I do anticipate a weaker play eventually towards the support of 112.65. Now, last week could have proven more to the fact of a bigger move, or as the catalyst seen from the Bank of England after they pushed their rates up 0.25% to tackle raising inflation. However, which is predicted to hit around 6% by April next year. That is 3 times the Bank of England's target for price rises. So no doubt I do anticipate further hikes from the Bank of England, and this may see a base around 131.50 to 131.70 or 50.70, and eventually see that upside move towards that 133.20 to 133.80.90 target, which I'm still in favour of. I like the pattern. The fact is that as we were declining down towards that 131.5 level, bullish divergence came through, and also from the MACD, which is still holding positive. In light of that, and also breaking over the midway point, could actually see a little bit more upside test with liquidity getting a little bit thin ahead of the festive season. May actually see that as a catalyst to trigger the balls to return and take the challenge higher. CAD yen displayed a little bit of demand on more to the probably profit taking ahead of the Christmas break. Therefore, could see a little bit more of an up test, but not getting too excited for CAD yen. And the reason partly for this move is on the back of a slightly weaker yen. And the CAD is actually a little bit stronger, so it's pushed this market up. But if you look at this pattern, this downtrend, and also how the whole structure does imply that we should still see a move back towards that 87.2025 and reassess. Since the rejection and posting a gravestone doji, the market still remains relatively negative, as all the candles are still holding that way. With the breakdown in the RSI, could see further risk, and we see a close under 1,788. May actually see a further threat towards that target that was rejected by that hammer of 1,757 to 64. With a weak dragonfly doji coming through, you can see here that there was follow demand, and now slightly in terms of the bullish candle that we can see here, I'm looking for a rise up towards 73.55 to 65 as the confirmation from the dragonfly candle was confirmed. That is after the break of 70.45 and has negated the downside target, which was around $64 a barrel. Still, the market may find good supply returning ahead of that level, around that 73.5 a barrel, and maybe see a retreat from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.